Walk us through the market's thinking when it comes to sterling right now.
Well, I think it's important not to overinterpret this move lower in sterling. I think a lot of it is down to a lack of liquidity and a lot of nervousness in the market. It's one of those markets where, because there's not enough liquidity there, you get a little move in one direction and then the algo trading starts kicking in, the stop losses start kicking in, and you're going to get some gappy moves. That's probably going to continue. However, I think it's unlikely that these moves continue in a straight line lower. It could be gap moves higher as well that we'll see in the next couple of days as people look for more clarity, they get more signs what's happening next, now that we know that Brexit really is going to be triggered. But we should have known that months ago.
That bit, yes. The sort of the imponderable bit over the last 48 hours has been whether or not we see the Scottish calling another independence referendum. That seems to have been the bit that maybe has caught the market and everybody else a little bit by surprise. So is that priced in, and how do I price that risk in?
I think actually your latter question is probably the more relevant one. I don't think you do price it in yet, because I don't think it is possible to price it in yet. Importantly, they're not going to let this referendum go ahead probably till after Brexit, after UK has left the Union. And I don't know how the S&P are going to convince Scotland that they can somehow leave the UK, which will have left the European Union, but then go back into the European Union. I'm not sure that process works. There's also the whole element that the whole debate around Scottish independence is different now. With oil prices much lower, they're much less able to finance themselves independently. There was already question marks about that previously, but now it's a much bigger issue. So I think the whole Scottish referendum debate is a really tough thing to worry about, and I don't think traders can price it in now. I don't even think they'll try to. It's 2 years away. At the moment, we've got to work out what the Brexit steps are, and that's the process for the next couple of months, next year probably.
Yeah, it'd be interesting to see if that feeds back in, though, to that negotiations surrounding Brexit, hard or soft. Talking of things that we're trying to figure out, Mark, just a very quick thought from you on, do we get a hawkish hike today or a dovish hike today from Janet Yellen? Oh, tomorrow, sorry.
I mean, look, everyone wants to know that one. I don't know any better than anyone else. I have no inside loop. My guess is that the data, i.e. commodity prices falling lower recently and the lack of, runaway inflation would suggest that a dovish hike would make more sense. And also the Fed has a history of erring slightly on the dovish side, maybe less in the last few months, but overall the long-term history of this Fed in the last couple of years has been that way. So my guess is that they are not overly hawkish. They leave it open. It can probably be interpreted either way, but ultimately yields come a bit lower tomorrow. But I have no inside loop, so we'll have to wait and see.